winner in the consumer to hold on. Mr. Alan Nuckman joins us, chief market strategist at bullseyeoption.com. Pretty reliable bull and seller of VIX at 60. What about it? 20. What are we at here? 20, basically, Alan.
20. Do you understand what the average is, like lifetime of the VIX?
About 16 and a half.
Yeah. Okay. So let's could you get your friend Ben back on?
Oh God.
I mean, I got to use his own words against him. Now he seemed to me rather concerned, as he always.
Text him, Alan. Text him.
Always. No. I want to use his own studies against him. He knows better. Last week was a classic example of test and reject. The market came back to unchanged. The NASDAQ was positive on the week, and the VIX was down 13%.
Right.
That is amazing. It's not how the markets act. It's how they react.
Right.
He knows better than to be negative off that.
Well, I don't think he was negative at all. He said we bounced back.
No, he was so concerned about the markets in general, the global concerns, the markets. You know, that's just his nature. I understand that. And he's also called me the second most bullish person on your shows.
Who's number one?
He says that Kevin is more bullish than me. I will fight him in a closet right now to be the bull.
All right. I see you had your Wheaties this morning, Alan.
I'm ready. Last week you caught me a little off guard. I am ready. So I'm here to talk about the calm.
Yeah.
Calm down, people. Calm down. We are 5% off the all-time forever highs in the S&P. We're 10% off the NASDAQ. This is exactly what happened in April. Guess what? Every time in market history, the market's bounced back the distance of the drop on that old top. And I don't know why it would be different any different this time.
Well, April we got 22 VIX in that sell-off. We just got 65.
Okay, we use the VIX as an indicator, my friend. The VIX is an indicator. Guess what? Whack-a-mole right back down like we've seen every single time in history. Now, let's see what happens for here. Everything is a positive. We needed a pullback. We got a shakeout. I call this an FO move, not what you think it is. It's called a fake out move. It forces people to take profits. It forces people to lock in those unrealized gains, and then they do it. And those people that don't buy when we're down, they regret it later. Interest rates declining, okay? That's exactly what we wanted. Inflation is down. Earnings are amazing. So guess what? The stock market is a function of earnings, as you know, and they're doing very, very well.
Okay. So hit me with the VIX range for the next couple of weeks. You think we're going down into like low teens again?
I would think so. Why not? I mean, there will be flare-ups from time to time, but you have to see how the markets react, not how they act. Obviously, there was somebody on the wrong side of that trade for that to happen. That'll all come out in the next weeks and months, I'm sure. But, you know, for markets to move like that, there was something happening. And everybody was crowded. We talked about how the dollar was crowded. If you saw the euro pop up to the 110 level, as I've been looking for. I didn't know what the catalyst was going to be, and I don't care. But we could see that we had crowded trades. The yen trade, obviously. We don't even need to discuss that. The currency trades, the stock market, the metals markets, they were all crowded. They needed a shake, and that's what we had.
All right. Well argued, a hard shake, but so far moving in the right direction. This morning, too, we're trying to buy this dip as well. As far as the earnings going, great. They're all right. We're hitting at a 78% beat rate, which is actually a little bit about average, basically.
Okay, so but the growth
sales are only beating at 45%. That's not that great.
The growth rate is 10% and the margins are at 5-year highs.
That's true, yeah.
Focus on the good. You can pick apart a scab if you want. I know you can. That's what you guys do.
Gross.
So, yeah, it is gross. And it is gross to do it. Take the positives. Say thank you and take the positives and take yes for an answer.
All right. Hey, you are trading, though, a stock that's been going nowhere, all right? So this is where I love you get us all bulled up, but then you go to like Verizon, okay? Who wants to wait in Verizon, Alan, if things are so great?
I have to ask you, am I here to entertain you, to amuse you, or to help you make money?
It seems like you're volunteering for the former and the latter.
Right. Okay. So I am entertaining, but I'm informative and educational, and I want to help people make money. Last week, what did I talk about? I talked about UNG. UNG is down here at decade-plus lows. The June option that we looked at is a year of time, right? Because a lot can happen in a year. And that option, you know, we had UNG down there at the bottom. That option was trading at 475 at the time. It's trading at 6
Yeah, that was the
bucks,
natty
so it's up
gas trade.
25%. So it's up 25%. It's a low risk, low reward, it's low risk, high reward play for the long term. So I'm not here to entertain or be that, that active trader. I'm a positioner. I don't trade. I put on positions. So the position I'm putting on today, yes, I'm sorry it's boring, but we also did this in AT&T about a year ago, and that's up almost 100%. So boring is good. That's what I want to do. I want to position myself with high probability, ridiculously boring things because I've got a life to live. I've got an amazing life, okay? I can't be looking at the markets all day, every day.
Right.
I want to position for success.
Okay, so you're buying it in the money for how long? 30 seconds, Alan, close me out.
Let's get into Verizon. Okay, let's get into Verizon. Verizon is boring.
You got 40 seconds, go.
It's got a PE of 8, all right? It's down 10% in the last 2 years, whereas the market's up. It's 35% off its 2019 high, where it was trading at $60. We're at what, $40.50 right now. So it's at a discount. It's been trading sideways for all of 2024 between 37.5 and 42.5. A breakout of that range, we're at the midpoint. The breakout of that range targets 47.5, which is significantly higher. The way to play a January option. Another lesson to be learned from last week, even if you bought, like if you wanted to buy NVIDIA, if you wanted to buy Apple, if you wanted to buy Micron, we're all great values. If you're an options trader, you were at a loss because the vol was so high that the options, even though you bought the right direction, the vol has been squeezed out. The air's come out of the balloon. So you're probably sitting at like a break even. So you're taking advantage of low volatility. The volatility in this stock is ridiculously low. I can buy a January option. A January 35 call is trading for about 6. It's 550 in the money. The expiration break even 75%. And I've got 5 months of good things to happen. And if we get to 47.5, which is the breakout target, still so much lower than the all-time high, that option gains 100%. So it's about math. And I'm sorry to bore you, but I'm here to make money, not to entertain.
Okay. Well, you have done both, Alan. Very entertaining. Appreciate the conversation. You're entertaining your cat back there, too, by the way. All right, thanks.
Where's the dog? Watch out for the dog.
All right. You got that dog in you this morning. I love it. I appreciate it, Mr. Nutman.
All right.
Thanks for your time.
Thank you.
All right, going along Verizon, buying the any-money call, looking for a breakout. Speaking of them, there you go. A perfect segue. We're going to talk pets and veterinary care.